41% of Americans, 106 million people as of 2022, do not have life insurance.
Like, you're literally investing in your future self. You have no idea how potentially you may need to use that capital, but you've done it. Sometimes we don't understand the power that we had to put in 10, 15, 20 years ago to be able to have the things that we do today.
You know, I think it's important that we talk about this kind of thing more often because it's not talked about.
I'm just trying to make sure that my insurability to protect my wife and my kids has been done. Go home and make sure everybody knows what you do. Other than that, you can't control it.
What's going on, everybody? Another week, another wealth webinar, and today we're going to hit a topic that's really so close to the heart and something that we don't talk about enough. I've been talking about it more and more, but we've got a guest on today that's going to tell a story that is difficult, but one that I think all of you need to hear, and I think he feels the same. But let me kind of just go back to a couple things. You know, all of you know what we teach. We teach you how to take back control of your money, and we do that by teaching you how to be the bank. And by doing all of that, we show you how to change one thing, folks, and that is where your money goes first. And that is into a specially designed and engineered whole life insurance policy from a mutually owned company that pays dividends. That's a mouthful. But that's where your money goes first, but it doesn't just sit there. We immediately then find a way to make that money go out and work for you a second time. See, the policy allows something that no other vehicle does. It allows you to earn uninterrupted compounding interest on all of the money while you're able to take that money out and have it go work for you. Now, yes, the insurance company charges you interest on those loans, but mathematically, we could show you how the interest on the loans is less than the interest that you're compounding at. It takes a couple years, and that's a big thing that people always stop us at. They're like, yeah, but... It's always the yeah, but. It's kind of like when I used to coach a snowboard team, I had a bunch of kids, and the kids always would say when we tell them something, yeah, but. And I said, no. Yeah, buts live in the woods and they have three eyes. They're a little critter. Have you ever seen one? So it was this running joke that yeah, buts were just creatures in the woods. You can't say yeah, but when you don't fully understand it. So what I'm referring to there is a lot of people, when they see the concept called the infinite banking concept, they want to make it all about a product. And that product, make no two ways about it, we don't hide it, it's life insurance, specifically whole life insurance, but specifically and specially designed whole life insurance. So whole life, just so you all know, I want to get the 800-pound gorilla off my back. It costs money. I said it. I know it sucks, right? Yeah, it costs some money. And I got this money mentor that called us the other day, and he said, hey, I got this client, and I don't know how to answer this question. And the client said, hey, when I put money into this specially designed whole life, you know, in the first couple of years, I don't have access to all of my money. Yeah. And then he said, where's it go? Like, is it just held there for me for a later date? Can I just not access it, or is it just gone? And I found this question kind of perplexing to me, because it really made me think. It made me think about how many people ask that question. Like when you put, let's just use round numbers, you put 10 grand into a policy, and let's just say you got 8,500 to use immediately. Okay, that's the cash value in the policy immediately in the first 30 days, the way we design them. And your numbers might differ from this. You might be 9,000, you might be 8,000. It's just all on how we design it. But right there, when I say that, some of you have this weird feeling. Some of you are like, oh, that sucks. I put 10 grand in and I only have 8,500 to use in the first 30 days. And then they might be thinking, because if I put 10 grand in a bank account, I have 10 grand to use the next day. If I put 10 grand in a money market, I have 10 grand to use the next day. But if I change one thing like they're telling me, and I put 10 grand into this specially designed whole life, and I can only take out $8,500, where's the rest go? How many of you have ever thought of that? Right? Has that ever crossed any of your minds? Well, it crossed this person's mind, because I asked, well, where does the 10% go? That's exactly what they said. And I said to this money mentor, I said, go back to them and tell them that the 10% goes to pay for the cost of insurance. And then tell him, because it was a male, tell him that cost of insurance is what makes sure that someday when we go to heaven, someday when we graduate, our family will still have a roof over their head. Someday when we graduate, that 10% will make sure that our family can afford the mortgage payment. Our family can afford the car payment. Our family can afford to put food on the table when we're gone. So if we're the breadwinners, if we bring the bacon home, if you so want to call it that way, I'm vegetarian, so no bacon going on here. But if we bring the money home and we're no longer here, the money stops, just so you all know. I don't care if you're W-2 or whatever you do, when you're gone, your income producing years are gone too, which means your family now has to figure out those income producing years and how to replace them. So when we think about that 10%, that 15% that goes to those greedy life insurance companies, as Dave Ramsey would say it, all those greedy life insurance companies are charging you too much money. Hell, those dividends they give you back, that's just a return of unused premiums. But let's focus on one thing. Where does that 10% go? It goes to make sure that your family will be able to maintain their lifestyle when you're no longer here. It goes to make sure that when you're gone, your name is remembered because that's part of your legacy. Hell, you could even go so far as that the day you go, you could have it written either in a will or in a trust document where it says that every single year, long after you're gone, every child born into your bloodline will receive a check on their birthday with Grandpa Naugle's name on it saying happy birthday. That grandchild doesn't know who Grandpa Naugle is until the check shows up in the mail saying happy birthday. And he takes the check or the whatever it is, digital money at that time probably, and says, Mommy, Mommy, Daddy, Daddy, who's Grandpa Naugle? Oh, let me tell you the story about your grandfather. See, he set this thing up that makes sure that all of you kids on your birthday, that he wanted to be remembered. Like, folks, that's where the 10% goes. That's where the amount that's not in your policy that you deposited goes. And if that is not acceptable to you, if that's not like something that you're okay with, two things. This is not the right webinar for you. But number two, I would suggest looking in the mirror long and hard and assessing and reassessing your priorities in life. I'm not saying that life insurance is the answer for everything, but life insurance sure does beat the alternative. Let me explain the alternative. How many times have you all heard about somebody that passed away and then the family doesn't know how to pay for the funeral, the burial? And the family can't afford the casket. The family can't afford to put on, the party for the family to celebrate that person's years while they were here on earth. I don't mean to go negative on all this stuff and kind of make you all think about this, but sometimes we need to think about that. Yes, when you put money in a bank account, you have 100% of the money in the bank account to use. But also when you put money in the bank account and you graduate, move on and go to heaven, your family gets how much? If you put 10 grand in the bank and you die the next day, how much does your family get? Some of you are saying 10 grand, but you're actually wrong. They get 10 grand minus whatever the probate court system decides you're going to get. Now, yes, maybe you do get the 10 grand if it's joint owned, but I'm just pointing it out. 10 grand is 10 grand. You see, in a life insurance policy, especially designed whole life policy, 10 grand could be 100. 10 grand could be 500. 10 grand could be 700. I don't know, it depends on your age. So sometimes we just need to stop and assess that, right? If you're here for the first time, you probably want to learn about the infinite banking concept. And I want to teach you about the infinite banking concept. I want to teach you about the process of taking back the banking functions in your life. But I also want to make sure that you all understand the single most important thing about what it is we teach and what it is we do that we very rarely and not often enough talk about. And that is what happens when you're no longer here. Does your infinite banking concept process still continue for your family? Does your family get to do all the things you did while you were here? These are the things we want to talk about. And I asked my friend Mark to come on. Actually, this all started with a message he sent me late one night. And he told me a story that I did not know. And that story was very moving. And I just asked him, I said, how do you feel about telling people about this? How do you feel about sharing this to a pretty large audience? I would say today's a smaller audience, but we still got over 100 people on. And he said, yeah, I think people need to hear this. But let me go over one statistic. Me and Mark, who I'll introduce in a second, we're talking about this, and he just said to me on a call right before this webinar, he said, I wonder what the percentage is of people that don't go out there and think about their family this way, that people, how many people are there that don't put life insurance on their lives? How many people don't protect that legacy? So I just Googled it, and here's what came up. 2022, the Insurance Barometer study, which was a study done of all Americans in the life insurance industry. And it said 41% of Americans, 106 million people as of 2022, do not have life insurance. And the amount that don't have enough life insurance is even higher. And here's another thing that's pretty interesting. And this is something Mark said. He said, have you ever thought about it that people literally spend more money on Starbucks coffee than they do protecting their life, protecting their legacy? Kind of puts things into perspective. It's great making money and earning wealth and doing all the stuff that we teach, but let's not forget single-handedly the number one reason we do this. And I'm going to say one more thing, and I'm going to turn it over to Mark. I've been in this industry for now almost 21 years. And in my 21-year time frame, I have had the honor, because that's exactly what it is, the honor of delivering more death benefit checks to clients than I can count on both hands and probably both feet as well. I've delivered a lot of death benefit checks. And I want to preface that every single time I brought that check to that widow, to that mother of 4 or 5 children in some cases who just lost their husband unexpectedly, and I hand them an envelope and they open it and it's a check for several $100,000. What do you think the reaction is? Do you think the reaction is like, that son of a bitch spent our money paying insurance premiums for this? Do you think that's what they said, folks? You think that was the response? No. I'm going to give you one particular example. There was this woman who lived way, way out by this town called Springville. I drove all the way out there, an hour and a half, to deliver this one envelope. I never met her before. I knew her husband because I did life insurance on her husband. He unexpectedly passed away to a heart attack. And when I delivered that check to her, she opened it. She had no idea how much it was going to be. And I didn't tell her. I just said, hey, I have something that your husband wanted you to have, and I wanted to bring it to you. And when she opened it, she immediately broke down in tears and dropped to her knees. And she did have little kids, and her little kids came over to her, Mommy, are you okay? Are you okay? And her answer was, I'm more than okay. Dad made sure we're okay. I get teared up just thinking about that moment, but that's just one of many of those checks that I've delivered. And now I have the honor to not just deliver those checks myself, but also to have a team of people who get to deliver those checks and go through the same things that I have. It's very hard, folks, but you know what? Do you think when I deliver those checks, I care about how many cars that client got, all the money back for? Do you think I care about how many private loans they were able to make out of that whole life policy and use the infinite banking concept? Sure, they got to live a better life, but you know what? At that time, the reason we do what we do becomes very evident. It becomes crystal freaking clear. Now, I know it's not sexy to talk about, but it is so important. So with that being said, I want to introduce you all to a friend of mine. His name's Mark Richards. He runs a company that does almost the same things we do, but actually a lot more. It's called Cool Hollow. Okay, Cool Hollow Solutions. And I actually retained them, and they work with me in helping me build Money School and all my other companies. And Mark firsthand helps me with those things, because Mark not just helps people doing life insurance and also doing investments and all sorts of stuff, but he works with business owners and helps them build their business and strategically plan to get their company where they want it to be. And Mark talks about all this stuff, but that's not why he's here today. So Mark, I'd like to just turn it over to you. And, I don't know how you want to begin this conversation, but I'm just going to let you have at it.
Well, first off, thanks for having me. And I'll do my best to try to keep myself together as we go through this. I think the best thing for anything like this is just to make sure if we have questions or want any more depth, please ask. That's why we're here today. Yeah, so I'll give you a little bit of my background, and then, we'll go through some of the stories of the last 15 years. So I started in the financial services industry 17 years ago. One of the fundamentals that we were taught was, of course, life insurance. And Chris and I come from similar backgrounds. it's a lot more sexy to talk about managing money and building wealth and doing estate planning than it is life insurance. But I was at a conference, and a gentleman named Ben Newman, I don't know if you guys know him or not, but a good friend of mine, came out on main stage, and he basically just told a story. He's like, when we start in a business, the hardest conversations around what we do granularly, basically speaking of life insurance, it's the hardest one to talk to that we're closest to, right? Because nobody wants to talk about life insurance. I mean, not on the death side. I mean, you get to talk about the sexy side every day, Chris. Like, this is the cool stuff. And so he went down through a story basically that he had never had a conversation with his sister and his brother-in-law. And you guys are probably getting where I'm going. And inevitably, he did not have the conversation and lost his brother-in-law in a car accident. But the challenge to the crowd was this: go home and make sure everybody knows what you do. Other than that, you can't control it. But at least if something were to happen, you did your deal, right? You did your end of the side of the story. So that was, I want to say that was probably about June-ish of 2009. I'm the oldest of five. Grew up in a little town outside of Gettysburg, Pennsylvania. Still live here currently. I'm actually sitting in a conference room of a place very close today for this. And so I came home and I talked to all my family. And here we go. One of them was my brother. I've been in the financial industry for 18 months at this point, guys. 18 months. My brother Jonathan, 20 years old, says, yeah, Mark, sure, right? My brother's not married. He doesn't have kids. He doesn't have debt. But he trusted me, right? And Chris can get into some of the numbers later if he wants to, but did a small term policy on him. He was working for Comcast, bought some stuff through the employer as well. And on a planning side, we can get through statistically how that does or doesn't make sense. But the reality is that in December, we lost him. He was killed in a car accident on a Friday morning and had to be recognized by dentals. He was hit by a dump truck and it blew his vehicle up. And the first death claim of my industry was taken to my parents. And it's amazing, right? Like, you think through the progression of having to do this. And now I get to reflect 15 years later. He'll be gone 15 years at Christmas. There were a few points, Chris actually doesn't know this. There was a few points where I almost left the industry because it was very hard for me to talk about life insurance for a while. And in about June, I don't know if we all believe in this or not, but Jonathan came to see me in a dream. And we used to ride in this golf cart around. We grew up on like 4 or 5 acres. And he just sat beside me and he told me he was okay. And at that point, I knew that I had to tell a story. And so now you look 15 years ahead. I couldn't even tell you the stats of what I've done in life insurance sales. But I got to look at the situation half full, not half empty. Everybody always says, man, I'm sorry to hear that, Mark. You know what? The reality is Jonathan would have wanted us to tell this story. Because if there's anything I know about him, he would have wanted to make sure that people heard this to resonate, to make the tough decision he didn't even know. Craziest thing is I was telling Chris about this, right? Like, a 20-year-old that had no real financial responsibility to anybody ended up giving my mom and dad the capacity to pay their home off. They gave some money to each one of their grandkids, which now sit in 529s, education funds, whatever, right? Life insurance. And ended up having a cousin that got diagnosed with cancer, didn't really have a whole lot. And we were able to use some of those dollars to allow her to go through her cancer. And she ended up passing in 2000, I can't remember, 13 or 14. And we were able to use some of those funds to make sure that her lifestyle towards the end was way better. The reality is most of us try to spend a lot of time trying to forecast what these dollars would be used for, having no idea that just doing the planning allowed so much more opportunity than they ever realized. That's probably a good place for me to stop. Go ahead, Chris, ask a question. Well, I regroup.
So when we were talking about Jonathan, I know it was 2009 and he was 20, but he had $375,000 worth of life insurance. Why do you think he ended up having life insurance? Like, what do you think the reasons were? Because at 20, Most 20-year-olds are not thinking about anything like that. They're not thinking about protecting their family, leaving legacies. They're just going at it being a 20-year-old. So what do you think was the differentiation between Jonathan and probably 99.9% of all 20-year-olds?
I think the reality is he met somebody that he trusted that could lead him in the right direction to make a tough decision he wasn't prepared to make on his own. I think that's the toughest thing with our industry, right? Like you and I both know that there's only so many people that we can touch. And, there's only one of me. That's what I love about your platform, right? You get to touch so many people, so much more than me just trying to pick up the phone and see 5 people a day. And, the getting different, but financial literacy in the United States, I think, continues to probably get worse, not better. And this is one of the keys. I think, he had somebody in his life that was a confidant that helped him think through making some decisions because I mean, the reality is we typically don't make decisions because we don't trust what we can do on our own. And then sometimes we tend to be a little bit what I call financially embarrassed, right? So we make no decisions at all because we really don't know which decision to make. And his older brother told him, let's get real, But yeah, that's
Well, I think that's a really interesting thing, and I'd love to ask the audience. I mean, we've got well over 100 people. I mean, how many of you would have done something like what most of you have done? Because I know most of you are clients or have policies. But when you got your first life insurance policy, was that you that just kind of woke up one night and was like, I need life insurance? Like, who can I call? Oh my gosh, my brother, my sister, I'm going to call them and I'm just going to buy life insurance. Is that how you bought your policies? Now, notice how we're focused on life insurance and we're focused on, the end result. Okay. We're not talking about IBC, but, and then also like the one thing I think a lot of you, as you're answering here, a lot of you that need to understand is we all understand that, as the agents, money mentors, financial advisors, whatever name you want to give us, we understand that. But we also understand that most people don't want to even remotely have a conversation about life insurance. Actually, that's wrong, Mark, and I think you'll relate to this. People want to have the discussion about life insurance when it's too late. I can't tell you how many people want to talk life insurance. They call us wanting to talk life insurance when they're 75, 80 years old, or when they've got a medical condition that came about and they no longer can get life insurance. They're like, oh, hey, can you help me get life insurance? And when I hear that, I'm like, okay. What's going on here that made you think about this? Well, I recently got a diagnosis. I've got cancer. No big deal. I'm going to beat it. But, I was just thinking, if something should happen, I want to make sure my family's protected. So it took you getting cancer to think about your family in this way. And that's a very hard thing. But you see, what we've had the honor to be able to do, and I said honor twice, is we've had the ability to teach people how to build wealth, how to create a banking system, how to take back control of their money, knowing that by just showing them all those things, which are sexy things, these are things people want to talk about, we know at the back end, it's taking care of that. And a matter of fact, we don't even talk death benefit. Matter of fact, we only talk premium deposits, and then we reverse engineer the policy design to have the death benefit needed, under the MEC 7 pay rules. So we're probably not doing a great job of getting people to be insured for the amount they should, but at least we're getting them over the hump because we're not talking life insurance, we're talking banking. And it's to this date right now. I just was on the phone with Brent the other day. It's over 10,000 lives. So that's 10,000 people that maybe, were part of that statistic that wouldn't have talked life insurance, that would have never got a policy. Or here's the other thing too, Mark, and I want your opinion on this. Term insurance is very prevalent. Like it's a lot of people, if they buy life insurance, they buy term. And I love term. I have term on my own life. We have term on almost every policy, but a lot of people buy term because it's cheap. That's the main reason. It's cheap. It's cheapest life insurance you can get. But it also has an expiration every single time. It always expires. I know when you were talking about Jonathan, his was 20 years. Okay, but a lot of people statistically, actually less than 2% ever make it. Well, I don't even want to say it that way. Make it, I should say, but most people, less than 2%
graduate to use it.
Will ever graduate in time to use the protection they put on. Therefore, 99.3%, I think it is, 99.3% will never use the life insurance they paid for. So is that the cheapest life insurance, or does that now become the most expensive life insurance you'll ever buy in your entire life? Now, we could talk about cheap and expensive. You're like, oh, that's all I could afford. That's different. 20 years old, like that's probably makes tons of sense. But for some people, they go with the cheap route, not thinking about what they're giving up. And what they're giving up is someday you're going to live past that term. I just had this discussion with a very wealthy individual last night, and it was interesting. He's got enough money to fund any policy for any dollar amount he wants. So let's just frame it up. And Mark, you deal with these kind of people every day. And we were going through his life insurance portfolio, which he did. He did a good job of putting coverage in place. He had several $1 million worth of life insurance. And on him, which he's the oldest, and I'm not going to get his age, but it has a 6 in front of it, he had all term insurance. And when we're going through it, we listed out the expirations, we listed out the convertibility options, which were really gone because he lived past the 10-year, convertible period. And really the discussion was, should we try to get coverage now in a permanent form, especially designed whole life, to replace these? And he said this, and I don't disagree, but I don't know if I fully agree, and the conversation's not over, but he said, I think I'm going to keep these in place because they're cheap. And it seems like a good value. And I said, you're right. They are cheap and it's a good value, but let me ask you, do you think you're going to live longer? And I had the date in my mind. Do you think you'll live longer than this? His answer was the right one. He said, I don't know. I don't know, but I hope so. So if you hope so, and hope is a good word to use here. If he hopes so, do we want to make sure that there's something in place after that? And his answer was absolutely. And he was going to talk to his wife. But I mean, think about that. That's somebody that's thinking about life insurance, but still is focused on cost. Cost is only an issue in the absence of value. So, Mark, I'm going to kick it back over to you. And Stephen, if you have anything you want to say on this too, please chime in. But you hear this a lot, and you work with some seriously high net worth individuals. I mean, how many of them are focused on the cost over the value?
Yeah, I think it goes to a few things, right? One is, I think term insurance gives the opportunity to enter the door, right? Especially from the world that we came from, because we know that statistically somebody's going to purchase from you, I think 7 to 9 times. Our goal definitely for Jonathan was to convert his term insurance to permanent insurance, right? Because these policies have convertibility riders on them for 10 years. And so we were just taking advantage of his young age, get him in, get his insurability locked in, and then build the strategy as he made more money and got through kind of the basics. I think I'll get a little granular, guys, but when you think strategically, right, there's typically 3 phases of insurance. One is, hey, in the beginning, right, how do we protect the liability of income? That's just the way I look at it. If I'm 20 years old or 25 years old, I've got kids and I'm just starting to make money and I'm paying off school debt and buying a house and all that crap, right? I'm just trying to make sure that my insurability to protect my wife and my kids has been done. I think the next layer, though, Chris, is where you're going, and that is really helping people understand the strategy and leverage. I even wrote when you were talking earlier, the thing that I love about, BYOB and just leaning on insurance the appropriate way is, people don't realize when you're building basically your own line of credit, let's just call it that, right? You're literally investing in your future self. You have no idea how potentially you may need to use that capital, but you've done it, right? You're not now trying to be reactive to where cash flow comes from on an arbitrage that makes a ton of sense. So I think for me, when I see term insurance, it's more of probably allowing us to get in the conversation to knowing that, building the filing cabinets, right? We build files in the beginning. That's why I'm now able to have these conversations 15, 20 years later. It's funny. I was just telling Hannah this morning, who's my wife, I was like, we need to have a conversation around. So I'm going to do a podcast, or not podcast, but a quick video. I do one every Sunday over the Green Egg. I don't know if you've seen them, Chris, but you have to check them out. So I'm outside grilling on the Green Egg, right? I do it every Sunday. I cook 30 chicken thighs for the week. I know you're a vegetarian. I didn't know that about you. And we use
Green Eggs are the best.
Yeah, and we do, we just do it for meal prep because I've got a 17-year-old son that's running all over ludicrous right now for soccer. And I told her, I was like, we need to do one that's around that must be nice, right? Because people say man, that must be nice, right? You get to do all this stuff or whatever. And I was talking to my buddy last night when I was coming home. I'd been on a ton of flights over the last 3 days. I said, the reality is sometimes we don't understand the power that we had to put in 10, 15, 20 years ago to be able to have the things that we do today. And the reason I'm saying that is I started doing this concept 15, 18 years ago that now gives me the ability to lean in and really have a great asset for the ability for me to continue to recreate and regenerate larger amounts of wealth as I get better at being able to do that, right? And I definitely think the third phase is leaning on life insurance to minimize our tax liability. You know, the wealthier everybody gets, I mean, this is just my opinion, but I just don't see taxes getting lighter, and inevitably they're going to want to take more of our assets when we die. And you know, going back to what Chris was saying earlier, right? Like typically you can buy death benefit 10 to 20 cents on a dollar compared to age. And so it's a great long-term strategy. I always say, you know, if all of your other assets that you accumulate through your life end up outperforming, you've got an asset inside of your insurance that helps protect them so that way they go to the next generation or whatever you choose to do with them, and not having to then, you know, boot 50% over the government when we're not here anymore. So that's where I've seen most of the progression of insurance through this process, is that there's normally those three phases, right? You have basic phase of protection, then you go into accumulation mode, and then I always say, like, life insurance gives you the permission to spend, right? Like, you think about that. And the other thing is
That's key. I want to come back to that, Mark. We got to come back to that. Keep going.
Okay. And so I think the other thing too, Chris, is that when you really think about life insurance that is pure as peace, right? Like, I love that. Go ahead and write permission to spend. We don't talk enough about what is the most efficient way to have dollars in your distribution mode when you retire, right? Like, we all fund 401ks. I think somebody wrote down that they have a pension from a police officer or something like that. And the reality is most of the things that we're inherently taught end up being very tax inefficient for us when we get into retirement. And if you know the fundamentals of life insurance, what happens when we take distributions from or money from the life insurance? Well, it's tax free, right? And I think statistically, if you really go back, right, they call it the safe withdrawal rate. I'm getting a little granular, but you know, you're allowed to take about 4% from your investment assets. And life insurance, if you play the game right, you'll be able to take 8 to 9%. So just think about that. You have 100 grand when you retire, you can take, what is that? 4%, 4,000.
Yeah.
Whereas if you have 100 grand sitting in life insurance, you're going to be able to pull, you know, $8,000 to $9,000 of that every year. So I think that's the other side of that. You know, when my buddy Seth was like, Mark, you need to just go talk serious high level about insurance and getting more people aware. Those are the conversations people aren't talking to you about. They just aren't.
Dude, I think that's powerful. I want to hit on what you said. Permission slip to spend. We all remember permission slips in school, right? We remember, you know, we go to mom and we get a permission slip. Sometimes you go to the nurse. You didn't even really hurt yourself, but you go to the nurse trying to get that little slip. I did this all the time. I was just I'm not gonna say I was a bad kid, but I was trying to be witty and, you know, go skateboard more and not be in school. But a permission slip to spend money. I can tell you there's tons of people that I speak to and have over my career that have told me, you know, that they take the income that they do from their assets, especially retirees. This is big for retirees, because they don't want to take their kids', you know, inheritance. They don't want to spend down their kids' inheritance. And I guess I never really thought about it. And, you know, you said that and I'm like, holy shit. Life insurance literally gives you the permission slip to spend all the money you worked your butt off during your life. You get to spend all of it. You don't need to leave any of it behind, because you did one thing that so many other people that are worried about spending their money. Oh, I don't want to spend the kids' inheritance. You know, that's for the kids. You know, even the car, like, oh, like you know, car, I got to just keep in the garage because that's going to be the kids. Like, how about this? That your kid might not want that car. Maybe that's the wrong color. Maybe that's the wrong make. Maybe the picture on your kid's wall that you weren't paying attention is a completely different car altogether. But yet, because that was your dream car, that has to become your child's dream car. I think a lot of parents do this. And instead of leaving them the car, leaving them the house that they grew up in, that they probably it's not their dream home, and leaving them the 401k with all the rules, maybe what we should do is just do a little additional planning, change where some of our savings goes first, and make sure that our kids, when we're gone, they can buy that red Porsche that's on their wall. They can buy that McMansion that's, they've been seeing on YouTube or on TikTok. They can do all the things they wanted, which are going to be different than the things you wanted, because the life insurance gives you the permission to spend it all. I love that. I love that. And then you mentioned retirement. I recently did a YouTube video. Really, I didn't come up with it, but it was done by a CFA and a CFP, and it was called Life Insurance as a Volatility Buffer. So again, kind of getting into well, let me ask you, you're in this business. Why do so many people run out of money in retirement? What are some of the reasons you would say?
Right now, inflation, taxes, just unforeseen. Probably, honestly, Chris, I'd probably say the largest thing is they think that they can minimize their burn rate in retirement. And we're actually seeing the opposite, right? Somebody retires off of thinking they're living off of 100 grand a year. We're seeing that 15 to 20% higher.
Yep.
Statistically, 18 months ago, to do your fundamental things in life now cost $11,000 more. And, those are just unforeseen things. You think about 15, 20 years ago when you and I started, how much was health insurance? I mean, now when you do a retirement strategy, right? Like, they'll be like, well, my house is gone, right? So that's 2,000 or 3,000 or 1,500. I don't know what the numbers are, but that payment's now gone. Whereas truly in a retirement strategy, you need to be leaving that number there because they're not going to have to use that for offsetting health insurance costs. Well, honestly, that's shit we didn't even think about 15, 20 years ago. We had no idea that those things were going to jump that way. So I think really what you see most of the time is almost a devalue of what the money actually needs to be, because they think that they can hypothetically live off less. You're not going to always say, like, you don't want to retire and live off of ramen noodles and Keystone Light, right? Like, it's not what you want to do.
Keystone Light, I remember that. Able to drink that. We didn't drink cold Keystone Light. It was always warm, because remember, couldn't afford the ice, so you just got a 6-pack and you just drank it warm. Oh man,
I think it was cheaper. I think it was cheaper to buy warm too, bro.
Probably. I mean, how many of you are just your stomach just turned, and you're like, oh God. Oh. Anyway.
Ugh.
Oh man. But imagine now, those are the things, like, I love that you mentioned the inflationary aspect, and especially with the times we're in, but we just came through, where yes, people literally thought they could live on, we'll call it 100. Now they got to live on 120. I mean, that's an unexpected massive impact on their retirement, because that means their retirement distribution percentage they take might have gone from 3 to now 4.5 or 5, which by statistics and by mathematics, most people would run out of money if they do that. But what these two brilliant individuals did, the CFA and the CFP, a lot of letters behind their names after that, is they said one of the biggest reasons people run out of money is because their distribution plan doesn't factor in market volatility. So when the market turns down, they're still taking that 120 grand, which is 20 grand more than they planned. They're still taking it from a declining portfolio. They might shift their portfolio a little bit, but it doesn't matter, because, as you know, all boats go out with the tide. So when the market goes down, all stocks, usually bonds, not all, but most will lose value in some shape, but yet they're still taking distributions from that. So now, instead of that distribution being 4%, it might now be 6%, because they're drawing it. And the drawdown effect to that decimates the portfolio on top of inflation, on top of spending more money, on top of unforeseens like healthcare and so many other things. So what these guys did is they basically took, and with the 401k, they took that and they added two things. So to take care of the market volatility, when the market went down, what they did is they stopped distributions from the 401k. They said, nope, we're going to shift that, and we're going to come over here. And it was just using whole life because of the guaranteed nature. And we're going to take distributions from the whole life. If I can get this. Okay.
But you're also creating a non-correlated market asset.
Perfect. Absolutely correct. And the distributions from the whole life were taken when the markets were going down, allowing the portfolio not to suffer any volatility exposure at all. The markets could go down and up. And when they started getting back to a point where it was, feasible to start taking distributions, they would. And the distributions they took from the whole life were taken out in a tax-free basis, because they took one of two ways. So the tax-free nature was because they either would take withdrawals up to basis, and then they flipped it to loans if they needed to, because that avoided having to pay taxes. So now, where they were over here in their 401k, the income they had to take was also they had to factor in taxes, which in some cases is 30+%. Over here, they didn't need to factor in taxes. So now it's more efficient for them to take the income from there. And this study went on to show like how what they actually started doing is using whole life to actually bridge some of the income for bigger purchases. And instead of using the 401k, or because this is your income, but let's just say you got an unforeseen and all of a sudden you need to buy a car, and then they would take a $30,000. I've seen this happen a lot as an advisor. They take 30 grand from their 401k because that's just where their money is, because they spent their whole life saving in a 401k because that's what they were told to do. That was the perfect plan. They take 30 grand out, not thinking about the impact, just thinking, hell, I need a car. I got to go see the grandkids. I got to go to work. I got to do this. But now all of a sudden, now they just crush the retirement. We're here with the whole life. They take the loan from the whole life, buy the car, and then just make car payments back to the whole life, and they get all the money back, and they had zero impact on their retirement savings. So all these different things, are all cool, fun to talk about things. But at the end of the day, getting back to what we started with, it's just life insurance. And the beautiful thing about whole life, and the reason we only use whole life, is number one, it never ends. You can't outlive it. So that's where I loved, you talked about those different phases of someone's life, someone's experience with life insurance, term, and then you convert them into whole life or some permanent insurance, because whole life isn't the almighty in life insurance planning. There's also universal life, but that's just all we use for that. And then you start talking about all the things that it does, because everybody wants a volatility buffer. Everybody wants to get all the money back for their cars. Everybody wants a non-correlated asset class, but nobody wants to buy life insurance, right?
I think the other cool thing, and just to kind of poke at you, right, is, when the markets are down, how much does life insurance lose?
Zero.
Zero, right? It will always be worth more tomorrow than it is today. Always. Right. And so there's a great piece called Taming the Bear, but that's exactly where you're going, right? That's why having that as a sub piece of your overall asset portfolio, however you want to call it, it gives you an asset that's not going to have market volatility. I said that earlier, right? Non-correlated market asset, but you're building something inside of your overall long-term strategy that's going to make a much better rate of return with very low risk tolerance.
And it's just like, just with all the other stuff that I've learned from the time when I was an advisor to the time now, which, I'm not a financial advisor anymore. I gave up my Series 7, so I can't call myself a financial advisor, but been in the life insurance and money business for over 20 years. One of the interesting things is, now that I understand what I understand, sometimes it's hard for me to really grasp and conceptualize why people don't understand this. I have just TikTok's my favorite, because TikTok's just full of haters. And every single time, just the other day, I had a post up. It was a 30-second clip. So Mark, can you explain everything we do in 30 seconds?
Yeah, right.
Right? How about anybody on here? Do you think, whatever it is you do as a profession, can you explain it to its entirety in 30 seconds?
I can.
No.
Stephen can. One, right? So I had this post up. It was with Brad Lee, and it was somebody had taken my whole Brad Lee interview, my podcast with him, which was a little over an hour, and they had condensed it down to a 30-second clip where I'm talking about recycling and recapturing money in the infinite banking concept. It was literally 30 seconds. Some of you might have seen it. It was on Instagram and on TikTok, and it wasn't my post. It was somebody else's, but I shared it. And in this, I sort of just explain it, but there was a lot of missing pieces. Like, I don't talk about the loans needing to be repaid. In that video, I do say the loans, the life insurance company will never ask you to repay the loan, which is true. The life insurance company doesn't care if you ever repay the loan, because they know you're going to die. And when you die, they're just going to true up that money that they gave you in loans on the death benefit. They subtract it. But this guy sent this long message to everybody saying how this is a scam. He doesn't even talk about, the loan not being repaid. He doesn't talk about the interest on the loan. And my comment back to him was, this is awesome. That's what I said to him. I said, this is awesome. Because in 30 seconds, you have been able to fully articulate and understand everything I do and understand all the scammy flaws of what I do in 30 seconds. You never thought that maybe this video was longer, like an hour, where I might have covered that thing, but you just say I'm a scam artist because I'm showing this concept which will change people's lives, but yet I missed a couple things. That's how people literally on social media live. And it made me think, and Mark and Stephen, I'd love you to both comment. It made me think, how many other people base their decisions in life on a 30-second clip.
Mhm.
You ever feel like you don't have control of your real estate business or your money? That's right. The big banks and the institutions, they're in control, right? I know you felt that before. Private Money Club puts you back in the driver's seat. As members often tell us, it's a total game changer. Join the community of like-minded lenders and borrowers by going to privatemoneyclub.com and sign up.
So we have this thing we actually walk through with clients, and it's like, hey, here's where we exist, here's where emotion shows up, and then here's where we exist again, right after emotion has been thought and dealt with. And on both sides of those curves is where we make decisions, not in the middle when we're involved in emotion. But you know where people make decisions?
Emotion.
In emotion, right? And so we really have to help our clients strategically think about being better of making decisions non-emotional. And that is a tough place to be, because if you look at either having a health coach or a financial coach, you're just naturally going to make better decisions because you got a confidant there that's going to walk you off the ledge. One of the things I was going to bring up too, and I don't know if you talk about this, but you know, I have a 17-year-old and she's 14. And one of the things that I started about 10 years ago is I actually started doing infinite banking for them. And, you know, I knew that as my kids got older, I would want to be able to help them, right? I came from, you know, I was the oldest of 5, talked a little bit about my brother. We didn't have extra. I mean, I always make the kind of joke, like there's not an ice cream place that I go by that if my kids say, hey, I want to stop and get an ice cream cone, I'll tell you what, we're for damn stopping, right? And the reality is that's where I came from. You know, my mom and dad didn't have the money to do that. And, you know, I knew that I would want to have that investment for my children when they got older to be able to use the same way, but not starting, you know, hypothetically 10 or 15 years late. And, you know, I think too, like it took me a long time to want to talk about life insurance on kids. I'm going to tell you guys, like I've been in the advising space, sold a lot of life insurance for 17 years. And I think it took me 7 years to buy it on my own kids. Man, I wish I'd have started that stuff 15 years ago, bro. You know, like, and it's going to be amazing, right? Like if my kids go to school, sure, we'll be able to figure out how to get all that stuff figured out, right? But man, when they come to me and they're 25 or 30, I mean, you just talked about this. I looked this stat up maybe a month ago. You know, the average person that wants to buy a $400,000 house needs to be making like 120 or 130 grand, and they can't have any debt. No college debt, car debt. They can't have any credit card debt. Think about that. Now, I don't know where y'all live, but in our area, the average home is probably $400,000. I think the combined income average in the United States has got to be less than 150. I don't know what it is, but
Way less.
so
80 some $1,000.
Okay, so you know, so like we're in a point of a collide, right? And the only way that I was like, man, well, at least my kids are gonna have a leg up, because when we get there, they're gonna have the opportunity to have a little bit of help. And I don't gotta go find it, right? Like I've already been slowly accumulating that for them, so that way when they're there, they may have a few $100,000 they can start playing a game in. I don't know if we talk about that, but I just thought, man, if we're not, start thinking about it, guys, because I'm seeing all kinds of different ages on the context down here. And, you know, it's one of the greatest gifts, in my opinion, because you can't control their insurability either. It's a great concept to talk about, but if we can't get them through underwriting, you're not buying it. Like you said earlier, like most of the time people come to us because they got a problem. Well, once you get to the problem, it's too damn late.
Amen. Absolutely. And we do talk about children's policies quite often, actually. I tell the story, you know, I like just telling stories about personal experiences. So when my daughter was born, you know, in the first 6 months, it should have been sooner. It's just, man, life goes fast when you have a little baby at home during the pandemic. But in the first 6 months, I ended up doing the first policy on Vivi. And, you know, we structured it, but then what we did is we kind of planned it out for her life. You know, I don't think it's going to stick the way it is, but I just want to see what would this look like. So we did a $5,000 annual premium deposit into a specially designed whole life. And, you know, basically just made her you know, she's the insured. We're the beneficiaries at this stage. Actually, the trust is. And and we're the owners. But what I do with my daughter now, she's 4, so she's starting to understand things. Like one of the favorite things that she loves to do is go out in the garage with her little. She's into Paw Patrol. Chase is her favorite, so she's got Chase with her all the time, and she's points to the car and looks up at Dad, and I know what that means. It means she wants to get in the car. So I open the door, and she crawls in the car, gets in the back seat, puts Chase in the back seat of the car, and asks me to give her the seatbelt because she wants to strap him in. She climbs around, gets in the driver's seat of the car, and then reaches over and pats the passenger seat for me to get in and sit down. So I just go in there and sit down, and she's just playing, and she's like, "What's this? What's this? What's this?" And like that's such a fun thing to do. But the thing that I'm teaching her is, someday she's probably going to like cars and all these things, and she's going to want to buy them. But I'm teaching her that, the most important thing she has to learn if she wants to buy things is how to be the bank, which means she can't just go into, whatever policy we created for her, because she'll have more than just one. I was literally just thinking like, man, I got to get another one. But she's not going to just be able to go into that policy and take money out anytime she wants to. She's going to have to sit down and engineer it and think it through and say, okay, Vivi, you want to buy that car, you're 16, you get to buy any car you want. However, Vivi, you have to be able to make payments back to your bank. So let me show you how to do a auto loan calculator. We go to bankrate.com or any of them, we calculate out. And Vivi, how much can you afford based on what you're making? I don't know, Daddy, I think I can afford $500 a month. Great. How much does that mean you could pay for a car? Well, I could pay $30,000. Dad, right here. And if the interest rate's a little lower, I could buy a car for 35. Well, Vivi, you're the bank. So if you pay a lower interest rate, that means your bank makes less money, which is fine if you understand that. You want to buy the $30,000 or the $35,000 car to keep your payment the same. Because listen, you're the bank. You make the rules, but you gotta be an honest banker. So she's 4, and all I'm doing teaching her now is just the exchange of money. So like when we go to the farm, because we always take her to the farm, I think it's very valuable for children to learn where food and things come from. So she pets the pigs, and then I explained, you realize some people eat these. No, they don't. And then, she'll look at the chickens and I'm like, do you realize like that's chicken? Like when you go to school and you're getting chicken nuggets, that's what the chicken comes from. They have to kill that animal to do that. So I know these are hard discussions, but these are the things we have. And the plants, like the little seedlings, we take her in the greenhouse and we say, here's the plants. And, last night when you had green beans, this is the plant it came from. And this is how they start. So teaching her all these things, but just like we teach our kids where food comes from, just like we teach our kids how to tie their shoes, how to put their clothes on, how to brush their teeth, how not to swear. That's a thing in my household. Literally, like, don't say what mommy said. I know she said ass. Don't say ass. You say but. But, we teach our kids things. Why don't we teach our kids money? Because we don't. When our kid asks us about money, at least growing up, how much does Uncle Paul make? Oh, you don't ask. We don't talk about money. That's not nice to ask that. Well, how much did that cost? Oh, you don't ask that. That doesn't matter. It's not your business. Yes, it is. We need to be teaching our kids that. So Vivi, when she gets in that car, I want her to understand the value of the car. I want her to understand what it takes to have a car like that. And I want her to understand that if you want one, you can have one, but you have to make the payment back to yourself. But that's okay because every payment you make back is money that's back in your banking system. So like, this is simple things. And sorry that was long-winded, Mark, but like, we need to be teaching our
It's
kids.
great.
And it all starts at whatever age they're at.
As I say, one of the things too that we did when the kids turned 13, so as soon as they went into their teens, right? We've had the kids sit with the accountant and they do taxes with us year end every year. So Luke will be 17. So he just went through his 4th one and he gets to see all the entities, all the income, all the taxes. And it's amazing as you expose that to them, right? Like how they start to think about the things that are set around them in their environment, because most of their peer group has no idea, right? And, I don't know about you, but I have spent tens of thousands of dollars getting coached and trained, right? So that way I could be better every day. I love it. You posted something earlier today. I think I liked it and shared it, but, it's basically, the only person you're really competing with is yourself, right? You got to look in the mirror every day and hopefully you're better the next day than you are the day before. I have a thing in front of my mirror. It says be uncommon amongst the uncommon. I look at that every morning before I leave the day. And all my goal is just to try to have impact, right? And I think the more that you can do that with your kids and exposing them to the reality of the things that are going on, the better they're going to be. Like my kids could probably jump on here and have conversations with you. Now they're at a disadvantage because I'm going to talk to them about it, right? Because this is what we do. But you're spot on. I mean, getting your kids, at least now, do I think my son will be an entrepreneur? Probably not. And the downside is he's seen me work so much, so hard for so long. I really don't think he wants to have that, right? You know that. Now, my daughter, on the other hand, she's coming with us to Seattle, right? She's going to do the kids entrepreneurial, and doesn't mean she will be, but man, she's going to get surrounded and be educated in it. It's fantastic, man. I love that.
So I want to go over to the audience here for just a few minutes. And I know Steven's been, going at the Q&As. So any of you that have questions as we're going, you're putting it in the Q&A or in the chat. I can't see the chat because every time I touch the chat, I crash my system. So I'm not touching the chat. But Steven, is there any things we should talk about that are coming up in the chat or any of the Q&As?
No, just good comments. And I want to make sure I don't miss anything. So if you do have questions, put them in the Q&A, please. But no, there's a lot of really good comments coming through.
And one of the other things too, as we talk about children, let me ask the audience, and Steven, you can tell me what they're saying, but how many of you have gone out and started teaching your children, I don't care how old they are, but your children about what you're doing with being the bank? Because the best way to teach is just show. So, I know teenagers, the best way to have them get a reaction or want to learn something is when they see something that they want and you teach and you just show them, hey, you can have this, but here's what you got to do. I mean, how many of you have started the process of teaching your kids about money through your own example? Like, because you are the example to your kids. And how many of you have actually gone out and started policies on your kids? That's what I'm curious to know. And is everybody liking today? It's a little different concept, a little different topic, but so vitally important. What are people saying, Steven?
Yeah, I mean, Dexter is, Janet, she has, Boyd started thinking about how to try to have these conversations with nieces and nephews. Jean's working on it. Dwayne said soon to start one on her. Test No Children, but teaching the neighbors' kids. Love it. Honestly, though, yeah, she was curious. I mean, of course, myself, Chris, I started Bryce's policy. It's in its third year, or I'm getting ready to put the third year deposit in, I think. So that's pretty cool. Let's see. Ron started money teaching, but haven't started a policy yet. So soon. Gina's doing it. Rick said, I've got kids, grandkids policies, thanks to this team. Yeah, Rick is, Rick's been working with Bruce, Chris. That's who that is. Chris will in the process on the kids has just started their first one. Very cool. Dexter is starting on his grandkids. Love it. Morgan, grandkids. Yeah, man, just keeps going here.
That's awesome.
Hey, can I do a shout out? We got Jeff here. Jeff Harrington. What do you think? Can you ask us a question on what potentially is going over their heads? Because I want to make sure we're not doing that.
So what was it? What was the question?
Jeff says, I'm not talking to everyone around me, not much positive feedback. I think it's over most people's heads. So I think it'd be good to make sure that if there's something that we need to just touch in a little bit more granularly, we can do that because we have time.
Yeah. Jeff's saying he tells everyone around him and he doesn't get a lot of positive feedback. So he thinks it's over. And we get that all the time. I mean, quite honestly, my brother and sister, they know what I do. They watch, they still have not started policies. I mean, it's the most bizarre thing in the world, but it happens. I mean, and so, I mean, Chris, like you're the busiest guy in the world. I mean, when before somebody would even talk to you about this policy, what do they tell you? Watch the 90-minute video, watch the 90-minute video. I mean, we will not talk to anybody on our team. And why do we do that when they could read a book, watch a 20-minute video, have to watch the 90-minute? Because infinite banking is so much more than a product. It's so much more than life insurance. It's an entire concept. And more importantly than the concept, it's a change of mindset. It's a change of understanding how money works and the way money flows. But once you make that change, and that's why we use that backwards bicycle video as an example with this, because when you learn how to ride a bicycle, you don't ride one for 20 years, you hop back on a bicycle, what happens? You know how to ride. It's like you never stopped. I snowboard. I didn't snowboard for I didn't snowboard for 11 years. I got back on a snowboard. I was riding down Black Mountains with Chris. I mean, it's one of those things just remember. And so our whole minds, we think one way of thinking about money. So it takes a lot to make that shift. But once it happens, you're never going to be able to go back. And so whoever said that, Jeff on here, like that's very common. And that's why you just have to continue basically not talking about it, but you want to show. So, when you buy a new car and your neighbor comments, hey, nice car. Yeah, well, let me tell you how I'm getting back every single dollar for that car. Every car I drive in our parking lot, guess what it has on the license plate? Something to do with IBC or BYOB. Why? Because my neighbors see that and eventually they're going to come around and be like, how are you guys, living in this beautiful house, upgrading your home and doing all this stuff? Well, it's because we're smart with money. We understand money. This is how you can learn too. So that's very common though, Jeff. Thanks for bringing that up, Mark.
Yeah, Mark, it is a really important thing. And I think a lot of people, when, they get around this campfire and they start learning about how this works and they get so excited. And inherently, when you're excited about something, that's what you want to talk to people about. It really is. And I get it. And you got to sometimes just pause yourself because your excitement isn't going to translate to their excitement. And I think a lot of times what we always do is we go to the common denominator, the simplest common denominator of everything that we teach here, and that's the product. The whole life policy. The second that word comes out of your mouth in any social setting, in any family setting, it's game over. You have just closed the entire discussion down. They don't want to hear about it. So let's just roll back a little bit of what we talked about today. And here's how I would say fifth grade level to frame things up. When you want to explain things you're doing, don't talk about what it is, talk about what it does. Let's just say, hey, I know this isn't, part of the conversation, but I gotta tell you, I'm just so excited. Like I'm literally almost out of debt. I've almost paid off all of my debt and I didn't have to work harder, longer, or take on any risk to do it. It's been amazing. And when I am out of debt, my life is going to change. Then just stop there. And I guarantee you, probably 99.9% of the time, the person's going to be like, wait a second, what did you do? How'd you do it? Well, let me tell you how I did it. I did it by doing X, Y, Z. I changed one thing. I put it into a vehicle. I immediately then started practicing banking. Literally, I just learned how to be a bank and do exactly what a bank does. So, and don't even notice how I'm not even talking about the product, but what I did is I started paying off all my debts in the proper order. And we can get into that again. But when I'd pay a debtor off, I would take the amount I paid them and I'd roll it back into my banking system. Because if I'm going to be the bank, I got to think as if I'm the bank. And I would put it back in the same place and I'd immediately take that money out and I'd pay it to the next one and the next one and the next one. So now I'm compounding my money. I'm building wealth by doing this, not having to work harder because I'm building wealth by just taking back money I was giving away. And let's just pretend the guy's name's Rick. And Rick, like how much do you know how much my credit cards were? I was paying 28% on my credit cards. I'm now making 28%. You know how I'm doing that? I'm just not paying it to Visa. I'm paying it to myself. It's the same return. Like, gosh, all these years, I wished I could have made 28% on all my investments. And now I'm making it guaranteed. It's just incredible. And then Rick would be like, wow, man, you got to show me how to do this. Well, Rick, I'm just learning this. I can't tell you exactly how to do it, but I can give you the exact same video I watched that taught me. And you could watch it. It's 90 minutes long, but it'll fly by. And what you'll learn will change your life. So that's one frame up. And that was long. But then, like car, you're like, hey, Rick, you're never going to believe it. Like, that new car I just bought? Do you know I'm going to get all the money back for that car? Or, hey, Johnny's going to school. Yeah, he's going to college. He just got accepted at XYZ college. Yeah, and Rick says, oh, man, that's an expensive school. Yeah, but you know what? Even though it's an expensive school, I'm going to get all the money back for him going to school. Well, how are you going to do that? Little Johnny going to make payments back? Well, actually, yeah, instead of us paying for the student loans, because I don't think Biden's going to wipe our loans out, instead of paying for those student loans, I'm just going to pay the same amount I would have paid to Biden. I'm going to pay it back to myself because I think I can manage money better than Biden does. Just speaking for a friend. So like, you see how I'm framing these questions up? Did I talk about a product at all once? But every time it's a product doing that, that's just the engine. When someone gets into your car and you floor it and the ass end goes out and it's going and like the person's like, wow, like is the first thing in their mind, like, I wonder how that engine operates. Heck no, it's like, man, I need to get me one of these. Just saying. So just is how you frame things. You know what else is totally
Just
off?
a couple little Q&As coming in. I'll go through. So Brad said, is it possible that delayed gratification is not something most people strive for? Being around this campfire for a while has definitely opened my eyes to this process. I did not have this in my 20s. Thanks, Mark, for a great share. Really cool. Jimmy said, I watched your video on YouTube from June 2nd, 2023. You mentioned in that video that interest rates have been going up. Where are we in interest rates for this year?
So I don't know what interest rate you're talking about, because when we talk about, you know, the infinite banking concept, there's sometimes three different interest rates. There's the guaranteed interest rate that the insurance company pays you, which since 7702, which is several years ago, has not changed. That's lock, stock, and barrel. And it's going to be anywhere between 2 and 3.75%, I think is the highest. Okay, so that's your guaranteed interest rate. Then the interest rate that does change and has changed, and maybe, Jimmy, this is what you're talking about. You're talking about the loan interest rate. So we deal with 4 different carriers, and the one carrier right now is 4.875. Another one I just looked today was 5.4 and change. What is Mass Mutual now? 5.4 something. Yeah, I think I looked at it the other day. And then another one is right at 5%. So they're all right around there, which should be exciting for you to hear, because even though that's gone up, because hell, that used to be 4%. But even though that's gone up, like, think of how much banks charge for loans. What's the lowest priced loan you can get? Usually a 30-year mortgage. And how much are those right now? Hovering around 7%. So if you can borrow from your bank at 5 or 5.47 versus borrowing from their bank at 7%, which one are you going to borrow from? And isn't it even cooler if you borrow from your bank and make payments back to your bank, you get all the money back? Like, literally, you just get it all back. So it's just a different way to look at it. But then the third interest rate is, like that example to that hypothetical Rick character, where I said I paid off my credit cards and they were 20-some%, and I recaptured that 20-some% by just paying the same payment I gave my credit card back to my banking system. So there's three interest rates. I'm not sure which one.
It's interesting, Chris, not to cut you off, but what I just heard you say, and you didn't say it, is if you create delayed gratification, because that was one of the questions, and now interest rates basically become irrelative.
100%.
Is that what I just heard?
Yes.
I think that's what you just said.
Because interest rates are irrelevant. I know we talk about them a lot because it's a tangible thing people can grasp and rationalize. But really, when you're doing your bank, when you're doing everything we teach, interest rates are completely irrelevant. There's just a couple rules, like, you always want to pay yourself back with interest, because you pay their bank with interest. Didn't say an amount, just pay yourself back with interest. You always want to make sure that you're making a spread. So just be cautious. If you take money from your bank, just like any other bank, if you take money from your bank and it costs 5 from your bank, you want to lend it or do something with it that earns a higher velocity than 5. I mean, you've never, ever gone into any bank anywhere that paid you 5 on your bank account and then charged you 3 to lend you a loan. Never. That's because they understand what I just said. So there's just simple rules. But yeah, interest rates are completely irrelevant. And we get people in the beginning, usually only in the beginning, because they don't understand it yet, that hyper focus on, well, how much is that policy paying me? What is the interest rate? What is the cost? And this and this and this. And then when you teach them the banking side of it, the infinite banking process, none of that even matters. It's so silly that the thing, it's just like in life, right? Like, things that were once a luxury become a necessity. It's kind of the same thing here. Like, things that were important to you in the beginning are just not important later, like, at all. I don't know why I made that relevant to, or
well, it's amazing too. Like, you start thinking about everything that is going on right now. Like, it should have so much more attractiveness to be doing this, right? Because of exactly what we just said. Because as you're building your own bank, you now don't have to worry about that. It doesn't matter that, I think one of your videos talked about mortgages the last 2 years, and I think you said 2 years ago costs were up maybe like 31%, and then this past year costs are up like 23%. But none of that shit matters. Nope. Because now you got your own bank that you can control that exposure, right? Because your hypothetical fee is whatever you choose it really to be.
I tell people sometimes, like, and this is a bit selfish in saying this, so I don't say it a lot, but I want interest rates to go up. I want them to remain higher for longer, because that means I make more money. And it means I make more money because, listen, If I'm lending money out, I'm lending it at a higher interest rate just because the banks are lending at a higher interest rate. If I'm buying a car and recapturing the money for the car, I'm paying myself back at a higher interest rate. Now, back in a prior life, I sometimes think, like when I would go and buy a car, I was so hyper focused on the interest rate that I had to pay because I knew that every payment for that car was going to somebody else. So that payment was largely determined by that interest rate. Now, I'm like, well, how much is the most expensive car loan I can get? Great. I'm going to pay myself back that interest rate because I get all the money and I get to use it. And it's just building it in. We build habits in life. We build habits. And once we get, just think about, folks, when I say habits, let me just frame up what I mean, 5th grade level. So how many of you, like when you started paying for a bill or started paying for something, at the beginning, it was really hard, right? You're like, I don't know how I'm going to afford this. Then all of a sudden, 6 months goes by and it's not so hard because you're used to it. A year goes by and you don't even realize it's coming out of your account. You're just like, I don't even know it's gone anymore, right? How many of you can relate to that? Put I in the chat. That's everyone. That's building a habit. So this is no different. So when you set this up and you're paying yourself back, you won't miss that money anymore. You won't miss it, not just because of the habit of paying it and you just get used to paying it, but now you won't miss it. I mean, literally, you won't miss it because it's back in your account every time you make the payment. So if my payment on my car is $100 more because I charged a higher interest rate on the loan I made to myself for the car, most people, if you told that to somebody on TikTok, they're like, you're a freaking idiot. Really? That payment that just went back to my banking system at that higher interest rate that I chose, the higher interest rate that resulted in a higher payment, means that I have more money compounding for the rest of my life. So who's the silly one now? It's just people, just that backward bicycle analogy. And I got to hit one thing and then we're going to get to Boyd. Stephen, before I forget this thought, earlier somebody was talking, and I can't remember who it was talking about trying to explain this to people and, getting pushback. And the people we normally want to explain this to are our family members. And in some cases, it's our kids. Maybe your kids are older than mine, because Vivi's only 4, but like, your kids or your parents or your brothers and sisters, your aunts and uncles, your nieces and nephews. Those are all the people that you want to help the most, right? Because that's your family. That's who you love. But then you start having this discussion with them and it's just very hard because it will go nowhere. Which, bringing it back to you, Mark, with Jonathan, I mean, you had that discussion and he trusted you and he went with that. But I wonder how many times, because like in my own life, like the only people in my family that have done what I teach is my wife, my daughter, who doesn't really know it yet, but she says, BYOB, be your own bank, Daddy, right? Be your own bank. She wears the shirts. And my mom, but my mom doesn't understand this, but she is starting to because her car lease is coming up. And I told her she's not allowed to buy another car on a lease. She has to buy that lease out and make payments, the exact same payments back. She's starting to get it because she's got policies that have plenty of money to buy the car. But outside of that, like think of all the other people in my family, not one of them, not one of my family or Larissa's family does what we teach every single day. And I'm around them a lot. Not one. And they've asked me about it. So tell me about this thing. And I give them the 90-minute video. How many of them do you think have watched the 90-minute video? 0. And that's sad. But if that's like who you're going out trying to teach this to, that's your problem. I don't know what it is. I don't know why it is. I'll never understand it. Maybe someday when I'm, sitting there, chatting with God, and I'm just like, hey, God, I was just wondering this thing, I always try to tell the people I love about what I did to try to help them, and they never wanted to listen. Can you tell me why? And then I'll get the answer. But like, hey, nobody wants to wait that long. It's just a weird thing. And Mark, I don't know how much you deal with this in your family or Stephen, but I struggle with this, and I bet you every single person on here does.
Before we jumped on, right, we were just talking about this, and I think kind of loud and clear is, as you guys are challenging yourself to grow and get better and think outside of the box, the reality is it's probably gonna change your circle. I did a post on this a few weeks ago. The big thing is really understanding having like-minded people around you, because they always say, right, the 5 people that you have around you the most are inevitably what you're gonna be. And have you done a hard look at what those 5 people look like? And you hate to say that about your family, but the reality is mine are not. My parents don't understand the things that I've challenged myself to grow into, the work that I've had to put in to get here, right? There's a lot of things that people don't see. And I think as you're thinking about changing your circle, right? Because you guys are doing things that are stretching you. You're making yourself grow. You are bettering your future, and challenging yourself to be able to do things that you probably didn't come from. And man, when you get more around like people, Chris, like you and I met on a whim on the most ridiculous opportunity. It was absolutely ridiculous. And
I feel like we have to tell that story before you
yeah,
leave.
you can tell it because you were blasting my ass.
Oh, should we tell the story now?
You better go. You're running out
So
of
folks,
time.
we're part of a mastermind called Boardroom. And, you know, I've been in Boardroom a long time. Mark and his partner were brand spanking new. First boardroom meeting ever. And at Boardroom, like they rah-rah you up in the big room, and then you go into these little breakout sessions, and there's various rooms that you go to, and you get a sheet that tells you clearly, this is the room you're in. Well, I've been in it so long, sometimes I don't even look at the sheet, and I'm just like, I don't know how I got the idea that I was in Mark's room. And I didn't know who Mark was. I'm sitting in the back with all the other OGs, and I think you guys were number 2. So Mark and his partner go up, they're number 2, and they're going, and right off the bat, I knew they were financial advisors, they were in my industry. So I start piecing all this stuff together, and I hear their wants, and what they're looking for, because you get a short amount of time to explain your business, your need, and what you're looking for from the group. And then the group comments back and kind of gives you suggestions. It's a mastermind. That's how it works. Everybody's there to solve somebody else's problem. So because of mine, I literally hand goes right up. I'm like, all right. I'm like, you guys, I'm not going to get into it, but I ripped them apart. I literally was just like, you're doing this wrong, and you got to do this, and you got to literally get rid of those licenses, and you got to do, I don't even know what I said, Mark, but I knew I was on a tear. And I'm like, either these guys are going to love what I'm saying, or they're going to completely hate it. And I didn't care either way. And then I get done, and and they sit down, and I had no idea who they were. And I just went in the back, and I'm like, hey, when do I go? Because I'm thinking I just totally told these guys, and these guys know nothing about who I am. I want to get up there and tell them my story and what I do, so they can kind of put some relevance on how I knew what I just told them to do. And he looks at it. Mauricio looks at the sheet, and he's like, Chris, you're not even on the list. Are you sure you're in the right room? I pull my little paper out. I'm like, come on, man, I'm in the right room. I'm like, oh shit, I'm actually supposed to be in the room next door. And then I had to leave the room. So what do you think the chances, like everything happens for a reason in life, folks. And there was a reason I was supposed to mistakenly be in the wrong room. That wasn't by chance. It might have been stupidity on my part, but it wasn't by chance. So I was in there, and now Mark and I have just been building this friendship and building this relationship and working together on so many different levels. I mean, listen, like nothing in life is an accident. It's all supposed to happen the way it's supposed to. You just can't fight it. And that's the story.
Amen. True blessing. That's for sure.
And Mark, I know you got a hard stop at 2:30.
I do.
So I want to be respectful for that. And I want to make sure I get to the rest of these. But is there anything you could tell the audience before you leave that you think would be worthwhile?
Green and growing and ripe and rotting. Continue to challenge yourself and growth every day.
Well said.
Right? Man. Leave it better. I always call play it forward.
Love it.
One day at a time, but man, continue to give. It'll come back tenfold. And treat people the way they should be treated. We're missing so much of that right now. Show with love.
Yeah, that's the best.
That's a key. We need more of that.
We do.
Chris, thank you so much for having me. Guys, it was a pleasure being with you. I know there's a few people on here. Steven, I've been wanting to say this all the time. Steven's my name. You know what that's from?
No.
Braveheart, guys. Got to go back and watch it.
My goodness, yeah.
Ireland. It's my island.
Mark. Well, hey, thank you so much.
With that, I'm out. See you guys. Have an awesome day.
See you, man.
All right, folks. So a little special treat, having Mark on, and really appreciate him telling that story. I was tearing up just the intro because I knew what he was going to get into, and I don't think he's really told that to anybody. So, Steven, I'm going to kind of kick it over to you because you can see the chat, and I see 123 messages, which means from all the time of the messages I've seen, there's 123 more plus 2 questions. So let's spend the last couple minutes just knocking these out for everybody.
Yeah, just the last 2 questions are similar. So Boyd was saying where I already have some policies in force, and another one about to be set up. He's getting close to his human life value, meaning they won't, give him more death benefit. right now. Does he need to wait till the term falls off in 7 years to be able to get additional policies? And then should he start convertible term policies now that he can then convert, once the death benefit opens, that he can convert those to a whole life? Well, they give them term, I guess. And then
Yeah,
Leah
they
was
won't.
asking, please explain about getting insurance young for insurability and conversion. Doesn't understand conversion. So very
Yeah,
similar.
so I'll come back to Lee as I started drawing that on the board. I want to hit Boyd. So Boyd, whether it's term, whole life, universal life, anything, the human life value calculation is going to be the same. But here's knowing a little bit about your situation. Some of the things you could do is you could go back to the insurance company and you could show them a personal financial statement. You could show them, more financials if you wanted to, share that with the insurance company. A lot of times the insurance companies will put a human life value on somebody that is not correct. It happens all the time. And they're not saying this is all we're going to do. It's just saying based on the information we have, this is all we're willing to give you for a death benefit, because that's a risk. That's their risk. But if you can show them that your human life value is higher, a lot of times you can push that limit up. I've even done that with mine. And usually it just takes a personal financial statement showing them, income or even projections of income. Sometimes that will work. And if you've got businesses, what you do is you roll in all your business income and you say, hey, these next policies I'm going to do are going to be to protect a different risk that I'm not doing with these. So then they can roll in the business income and the business assets into the equation. So I would say don't give up that easy. And I would definitely say don't wait for the 7 years to end on the term. But the option to get a convertible term wouldn't help you at all. It's all the same calculation. So Boyd, one thing I would maybe recommend is just jump on the phone with the money mentor that you spoke to. It eludes me I don't remember who exactly that was. But go through your numbers with them and be transparent, and it's totally confidential, and walk through them. And then they can take that and they can go get a preliminary underwriting decision and kind of see what your human life value is. That would be my recommendation there. And then can I just roll right into Leah's?
Definitely.
All right. So Leah, you're asking about the insurability. So that's key. So insurability is such an important thing, primarily because we just never know when we're not going to be insurable. I mean, just today I took one of my cars out and, as I pulled out into the road, I just felt a little hair up my ass. So I dumped the clutch and dropped the gas, and the thing went completely sideways. I mean, I could have hit something and that could have ruined my insurability. You never know when you're going to, have an accident or something that takes you out of being insurable. So one thing I always tell people is, like, if your goal over here is you want to build a banking system using whole life, but you're not at a point where you can, put the amount you want in. Let's say your goal is, I'm just going to use round numbers, folks. The numbers can be anything you want. I just like using simple math. Let's say your goal is to put 100,000 in premium deposit into your whole life. But today you can't do that, but you want the ability to do that. One thing you could do, which is really just protecting insurability, is you could take out a term policy. So let's just say a term 20. Okay, you could do a term 20 policy, and you could say, all right, you could run the numbers to say, to do 100,000 into a whole life, it would mean that I would need to, I would need about, let's see, what would it be? Let's say $2 million worth of death benefit. So what you do is over here, you take out a term 20 for 2.5 million, a little bit more than what you'd want the ability, maybe even 3 million, because it's really not that much more to go that high. Because the insurance company, remember, the reason term is so cheap is the insurance company knows that they're probably not going to have to pay out on that. That's why. It's why it's cheap. It's no secret. So you get the term insurance from a carrier that you would want to do the whole life with. So let's just say, I'm just going to pick on one. Let's say it was Lafayette Life, okay? You wanted to build the policy with Lafayette because you like the design. So you would want the term to be with the same carrier, because the conversion is going to be carrier specific. So if you did a term policy with AXA doesn't have whole life insurance. So even though you got a convertible option, you got a convertible option into a product you don't want. So now you got this $3 million. Read the fine print, because most term policies are only convertible for the first 10 years. But if you think that's enough time, the term got you the insurability. So let's just say anytime in the next 10 years, you had something happen, so you're not insurable. So non-insurable, now you are insurable up to at least the 3 million. So what you do is you convert the term policy into the specially designed whole life. It's tricky for us, and I want to be clear about this. It's very tricky for us to design the policies from a term policy, because a lot of times people don't realize that we can only convert up to the death benefit you have. And a lot of times when we want to build the policy for the amount you want to put, it might require more death benefit than what your term is. That's why I said, if you're going to do this with a strategic plan in mind, over insure with term, even if we don't convert at all. Let's just say we only want to convert 2 million. That's great. We don't need to convert all of it, but you want the ability to convert as much as possible so that you don't get to the table and say, hey, I want to put 100 grand in, and we come back and say, hey, you can only put 20 grand in based on the amount you can convert. Hopefully that helps.
Well, let's see. And then Brad's popped back up. I'm thinking about the IBC conversation with family members. I'm reminded that you teach us that we are the 5%ers. So this keeps my mind peaceful, knowing that some of my family members are choosing the 95% club. Yeah, thanks.
And Brad, there's nothing you can do about it, and it's a hard fact of reality. Just look at Stephen and I. Like look at what we do. We have the ability to literally change lots of people's lives. Of course, we want to change our family's life, but yet our family won't listen to us, even though our families know that we've got over 1,000 videos on YouTube all about this, that we're nationally recognized, that we're in all sorts of magazines and newsprints and all this stuff. Like, our families know this, yet they won't listen to us. It's an interesting dynamic, but sometimes you just have to just kind of say, all right, listen, I'm not going to tell my family about this. I'm not going to talk to my family. I'm going to go talk to people that I don't even know. And then my family's going to see me doing this. And eventually, maybe not, your family will say, hey, you're helping all these people. How come you never tell us about this? That's when you do one of the big slap to the forehead and you'll be like, you know what? I've been trying to tell you about this for 10 years and you never listen. But now you see me helping the neighbor and you see the Ferrari in his driveway that he's getting all the money back for. Now you want to know about this? I'm just kidding, but you get the point.
Yeah.
Well,
when converting term, is it all or none, or can you take bite-sized pieces?
No, like I was saying, like if you were, sorry, I erased it, but if you were going to do a term policy, you don't have to convert all the term. So if you had a $3 million term policy and you only wanted to convert $1 million of it because that's what worked for the design for the whole life, you just convert $1 million. You're only going to need to convert what you need. Now, when you do convert, you're getting rid of the term. So it's kind of a one and done type thing. So it's not like you can say, all right, I want to convert $1 million now, $1 million later. I'd have to double check because I don't know this to be fact, but I don't think you could do bite-sized pieces. I just don't think it works that way. Man, great questions.
And then we were just saying, can you do such a large term on a young adult, like 20 years old?
Yeah, here's another thing I don't know. I don't know, because I said this and then I questioned myself. I don't know when an insurance company looks at term versus a permanent policy. I don't know if they're doing the same calculation for human life value, because I think the risk is a lot lower with term because they know that there's a very strong probability that you're not going to ever they're never going to have to pay out on it. So maybe they will give you more with term. Thanks for bringing that up and thanks for questioning that. I said something thinking I knew the answer and I started thinking about it. Maybe I don't. So we're going to ask about that. We're going to find out if the human life valuation that they give is the same for term and whole life. I think it is, but I'm thinking through it now, thinking maybe it's not. So yeah, let us get back to you on that.
She said it just looks bad taking out millions on your children.
Looks bad to who? Who are you trying to impress? Or who looks bad to who? I mean, if the insurance company and you only know about it, like, doesn't look bad to anybody. And you know what? I get what you're saying. Yeah, maybe it does. And I don't even know what the death benefit is on Vivi's policy. It's in the millions. But I don't think about it that way. And that's the thing I think people would have a hard time understanding, like how much did you just buy a life insurance policy on Vivi? Oh, it's $3 million. They're like, why did you need so much? Or is something I need to know? Yeah, that's probably what you're thinking. No, it's not something I need to know, but we're building a banking system for her and we want the ability for her to put a lot of money into her banking system. So the IRS said that's how much money we needed in death benefit to be able to put the amount of savings in that policy for her. Any questions? And then it will go right over their head at that point. So they won't ask any more questions because they just won't understand what you just said. And sometimes you just got to just play that. I mean, if I don't want to have a discussion with somebody just because I think it's just going to be a waste of time, I'll just go over their head. I'll talk about economics or, something like that. I'll start talking Austrian economics, and then give it about 10 seconds, maybe 15 seconds, and they don't want to talk to you anymore. So then you succeed in both ways.
All right. That's all the questions over here.
Awesome. So folks, not to go a little bit long, I hope you guys enjoyed today. I hope you liked Mark's story. And, I think it's important that we talk about this kind of thing more often because it's not talked about. And we're definitely not doing a very good job talking about the reason, to think the death benefit side of it and what you're actually giving up, like that money you're giving up from your premium deposits that's going to this. So I just think it's just ever more important that we keep bringing this up and talking about it. But the other thing too, for any of you that were like, oh, I just want to learn about the infinite banking concept, the good news is Stephen and all of our money mentors have put together Take Back Control Tuesday. So every single Tuesday at 1 p.m., we do the 90-minute presentation. So you can hear it delivered different ways from different people. It's really cool. I can't believe we didn't do this sooner, but it's getting a great response. How many of you have gone to Take Back Control Tuesday? Put I in the chat. And we're getting unbelievable feedback, and we're just getting started. So if you guys are looking to learn more about the infinite banking concept, you could either watch the 90-minute video. I'll have Stephen put that up in the chat right now, along with the link to set up a call. So if you want to talk to anyone on our team, you just book a call with us. They're not going to try to sell you anything. They're just going to try to talk to you and solve your problem. And if they can, you can ask them to help you. So that's the way we work. But if you want to watch it live, and maybe you want to invite, this is the thing, maybe you got family members, maybe you invite them on to the webinar to watch Take Back Control Tuesday, because
Great idea.
What's that?
Great idea. Great idea.
Yeah. So like, any of those family members that you're having a hard time getting through, or those, coworkers that just won't listen, you'd be like, hey, listen, come watch this webinar with me. I'm going to turn it on and we'll watch it together, or, just turn it on, and then they can watch it live on their own clock. And I think that might be the way to do it. Don't even tell them what they're watching. Just say, hey, listen, you want to learn how to get all the money back for every car you ever buy, drive, and own, or you want to learn how to pay off all your debt and build wealth by doing it? Like, here's this webinar. Check it out. Like, again, don't tell them what it is. Don't say, hey, you want to learn the infinite banking concept. They have no idea what the infinite banking concept is. Talk to them about what it does and hit home for the person you're talking to, and watch how many more people will watch that 90-minute video or join us for Take Back Control Tuesday. It's all framing, folks. With that being said, folks, it's a real honor every week that Stephen, myself, and all of our guests like Mark get to come on here and get to chat with you and talk to you and teach you and just share stories so that all of you can kind of relate and take those stories and go do amazing things with them, or just, learn something new. Because Will Rogers said it best, the problem in this country isn't what we don't know, it's what we think we know that just ain't so. So take what you just learned and go out there and apply it. And on one last thing, and I'm just going to pin myself up here, this is so important. Driving to this webinar today, just going through my neighborhood, and a guy who was landscaping just kind of, I heard him say something because I had the top down, and he was waving, and I went by. I didn't know who it was, but I knew I was just dropping something off and coming back. So on the way back, I stopped, and I said, the guy came over, and I recognized him from afar. He was a guy I went to high school with. And he comes running up to the car. He's like, Chris, I knew that was you. I never missed that hair. I guess I've had the same hair since high school. I said, I knew that was you. He's like, dude, you're my idol. Like, I watch all your stuff. And this is just a guy from high school that I haven't seen since then. I admire everything. And he's like, dude, I got to tell you, back in high school, I told everybody you were going to do huge things. And it just meant so much to me. But then I just stopped. I didn't want to hear any more about myself. Like, it was really cool. But then I said to him, I said, so what do you think about every single day? Like, what is it that you want to do? Because I knew he worked for this landscape company, the same one that does our house. And he says, I want to own my own landscape company and not be employed by somebody. And these guys treat me great. They give me courage and a lot, but I want to have my own company. I said, do you think about it every single day? Is it a thought? Is it an idea in your mind that you go to bed with and wake up thinking about? He said, every single day. I said, well, then if you don't stop thinking about it and you keep focusing on it every single day, nothing else can happen, but you will have your own landscape company. You know what his answer was the best? He said, you know what? I know it will. It's just a matter of time. And that was it. So if that's all people are getting from my videos and my messaging that I'm putting out there, and this is a guy from high school that I haven't seen since then, I take that as just the biggest badge of honor that I'm winning at what we're doing, because belief is probably 99% of the game. If you believe you can do something, if you've got an idea and you believe you can do it and you don't let anyone talk you off that, the only thing that can happen is that. So with that being said, folks, from Stephen, myself, everybody over here at the Money Multiplier, BYOB, and all of our other companies, we want to thank you for your time, for joining us today. And we'll see you this afternoon at 4:30 for the happy hour, Ask Me Anything, where you can bring all your questions and we will answer them as a team. Till then, see ya. All right, so I hope you guys enjoyed that episode. We're putting up tons of them, but I think if you like this one, you'll probably like that video as well. Not only that, I've got a book that I created, Mapping Out the Millionaire Mystery, where we actually show you what the wealthy do in the game they play with money. I want you to have that for free. And if you want to know about all my new videos coming up, click that alert button. Actually, smash that alert button, and you'll be notified every time we put a new video. So we'll see you on the next episode.